Welcome back. Still tuned into the market. Let's also take stock of what's going on when it comes to the consumption sector, largely on account of the demand trends due to the second wave, the rural economy, as well as discretionary spending. Joining in to give us a 360-degree view of the space is Sanjesh Thakur. He's a partner at Deloitte, as well as Vinita Bali, independent director and the former managing director at Britannia Industries. Thank you so much for taking time out and joining in, to give us a view on the sector. To begin with, then, Vinita, the second wave this time around did come in as a bigger shock. It's been a lot more widespread. How have you looked at the overall consumer trends in light of this, and how different has it been from the first time around?
Thanks, Abha. Obviously, this has been more virulent this time, and the numbers and the images are there for everybody to see. I think the more important question really is what this has done to consumption and consumption-led demand, because we keep talking in terms of growths, etc., which is absolutely critical if the economy is to grow. But in the current scenario, we've seen a significant reduction, if you like, in demand numbers. And this is virtually across the board. That was quite clear in at least the GDP data that we've got so far, which also, by the way, measures only the formal economy. So, the 90% of consumers in India who are part of the informal economy are not measured in these numbers. So what is absolutely significant from my point of view is to do whatever we can to put money in the hands of people that starts the everyday consumption, which is going to kickstart the economy and the investment cycle and everything. And unless that happens more significantly than it has, I'm afraid we're going to see a much longer period of recovery than we have so far.
Sanjesh, would you tend to agree with now the focus a lot more on health? There are increased financial concerns at the moment. What is the consumer trend looking like currently?
Right. So, Abha, thanks for having me here. And just extending on what Vinita mentioned, if you look at four broad dimensions of the consumer spend, and I'll start with the state of the consumer, right? So at Deloitte, we've been tracking the consumer sentiments over the last 15 months. And if you look at the last 15 months, today, the consumer anxiety is at an all-time high. We all know what anxiety does to us, right? So if you are anxious as a consumer, you postpone consumption, especially of the discretionary items. So today, we're seeing consumers are 45% of the consumers that we surveyed are anxious about their health, their financial well-being, the health of their extended family, and that really has a ripple effect on the consumption. We are also seeing similar sentiments on travel and some of the other area like automobile consumptions, consumer spends. So the urban India has probably a different trajectory and a different curve of recovery, but I think the problem this time is very deep in the rural India because of two reasons, and there are some silver lining at the end of it, but I think rural India has seen the biggest impact of this wave. We've got 30% of caseloads in rural India. Mind you, this was just about 15-16% in wave one. So as the cities are coming out of it, and obviously caseload in rural India is low, I think we need, in addition to a good monsoon, in addition to a good festive cheer ahead over the next 6 months, I think we need some stimulus which will give more money in the hand of end consumer.
Okay, so clearly, we are definitely going to see more pressure this time around from what you're saying as well in terms of the recovery. If we take a look at perhaps some of the kind of restrictions right now that we're seeing and what we're seeing in the rural pockets versus urban as well, what are the kind of trends that are different this time? I mean, last time we saw, smaller pack sizes, there was increased spending, but on sort of more select items. This time around, there has been an increased focus on savings. So even if we are anticipating spending to pick up, what are the kind of trends that one can perhaps anticipate this time around? Vinita?
You know, Abha, when we are comparing this with what we saw last year, I just want to put last year also in perspective. So if we were to go back and recall the numbers for last year, you know, in Q1 was the biggest decline that we saw of 24%. Then Q2, I think, was about 7.5%. We saw a marginal recovery of 0.5% in Q3, and Q4 was 1.6%, which added up to the 7.5% that we've been talking about. Now, as Sanjesh mentioned earlier as well, the intensity is far greater this time, and the spread is not just in urban India but also in rural India. And we actually have very little data as far as rural India is concerned. So the basic premise is that people spend when they are feeling good, when they actually have money to spend, and when the levels of anxiety are not very high. And, you know, right now, none of those three factors are really working in favor of a largely consumption-led recovery. And therefore, I think it's absolutely critical to go back and say, what is the stimulus that is being provided? Are we putting more cash in the hands of people, which says, okay, I know, for example, that for the next 3 months, so much of cash is going to come into my bank every month, so I can actually spend rather than be extremely frugal and save. You know, we've also seen some recent surveys. The Center for Monitoring Indian Economy has put unemployment at about 14%. We've got another report by the Premji Foundation that has talked about 230 million people going back into below poverty and so on. Now, all these are factors that should concern us. So, you know, my thing, Abha, is whether it is small packs or big packs is really less of an issue. The greater issue is how is it that we're going to put more money? Are we extending the number of Narega days of employment, for example? Are we saying that, you know, for the next 3 months, in addition to the rations that you're going to get till Diwali, you're also going to get so much money deposited into your bank account, you know, all this jam and everything that we've been talking about. This is the time to actually use that infrastructure and, you know, create for ourselves, you know, a stimulus in terms of consumption and a momentum that will then give rise to the growths that all of us want to see in this country.
Absolutely. Sanjesh, how do you feel, you know, the regulators can go about it and create that stimulus? And, you know, to add to that, this time around, we're also going to have the increased squeeze of higher prices, and that's going to definitely put its own pressure on things as well.
Yeah, so Abha, you know, a couple of points I would just like to mention both on the rural income side. You know, I think if you look at three important aspects, right? If you look at their wage index and the overall income in the rural economy, I think that's taken a severe beating. Number two, if you look at the rural India, you know, I've lived in rural India, I travel and I do a lot of work with clients in rural India. If you look at rural India, they have spent, most of the families have spent a large part of their savings on, you know, their hospitals and the, you know, and the COVID treatment. And mind you, these are not people with medical claims. They're not like the consumers of Metro who have cashless, you know, or insurance facilities. So a large part of their savings have been dented or have been consumed because of COVID. Now that bunch of consumer, even if there is a great monsoon ahead, or, you know, if all the other macro trends are fine, I think the stimulus from the government has to be in the form of, you know, some form of direct benefit transfer where we are actually putting money in the hand of consumer. Free grains, you know, and everything that the government has done is welcome move. But I think if we can put money in the hand of consumer who is otherwise sitting on the fence, who is anxious, and, you know, we all know that anxious consumers are very deeply cautious, right? So we'll have to get them out of caution, generate money for them so that they can go ahead and spend. And I think as we look at life ahead, you know, we are coming out of lockdown. But my take is we are coming out of lockdown, but we are not out of the woods yet. a lot depends on how some of these measures will really get announced and really get implemented over the next 6 months.
Sure. Also wanted to understand, Vinita, since the pandemic, we have seen that, the big are getting only bigger. Do you think this could intensify further after the second wave and that brands could see perhaps more and more consolidation going forward?
Abba, what we are seeing is not unusual. In tough times, it is the companies and consumers with resilience who are able to ride the storm, as it were. So the big companies have also planned well. They all had lines of credit, which they have used. And therefore, the squeeze really is on the smaller players. And so consolidation is actually a result of this. You no longer can afford to run the operation that you were running because, money has become tight, receivables are going up, and so on. So that is why we are also seeing not just business consolidation, but also consolidation of market value in fewer and fewer companies, which again is not very unusual. I think the important thing is for a market like ours, that dynamism of regional players, national players, etc., is very important and very critical to keep the consumption going. But I think in the short term, the price that everybody is paying is for, the bigger ones to survive better than the smaller ones. And in some cases, this consolidation may actually make sense in terms of getting economies of scale and so on. So all of it is not negative. Some of it will actually work both for the companies as well as for the consumers. But yes, there is a much bigger strain on the smaller companies as compared with the larger ones with more resources, more lines of credit, etc.
Bound to be. Sanjesh, as we wrap up this discussion, wanted to understand, not now, not tomorrow, not day after, but 5 to 10 years when you look ahead into the future, what shape do you think the FMCG industry would have taken after the learnings from the pandemic?
Well, that's a great question, and I think 10 years is a fairly long time, Abha. But clearly, I would like to just touch upon a few trends that I think are, I won't say are new normal, but I think they are going to be, relevant in some form or shape. Number one, if you look at the entire e-commerce growth, right? I mean, we've had a blip last year, but I think today e-commerce is not a platform for household and staples, and I think we're seeing a lot of traffic and a lot of growth on e-commerce. So e-commerce is bound to be here, and we'll see very, very high levels of growth in certain categories that were not there. I have clients that I work with, and if you look at categories like durables that were very, very small part of the overall e-commerce, I think a large part of a consumer journey today is on e-commerce, and that trend is going to continue. That's one. Number two, I think the entire aspect of digital and digital payments has got a significant push. I think those are, so we'll see digital in everything that we do. If you look at the pandemic and if you track data around, May to May cycle, which is the last 1 year, the online consultation has grown about 5 to 6 times. That's huge in a country like India. And this is, mind you, up to May because we don't have the rural data coming in. So e-commerce, mobile and online is going to be the way of life. Omni-channel will have much bigger play because today you may have consumers shopping online and making the buying decision online, and he may be actually picking up stuff at stores. So omni-channel is going to have a big play into the future. And I think with all the sentiments around vocal for local, right, or the entire ecosystem of locally sourced, locally produced, I think consumers today are a lot more conscious of buying something from their own country or from the local supply chain. Not just in the food and grocery space, but I think it's moved into apparel, and hopefully we'll see that expanding into some of the other categories. So I think consumers today will give a lot of weightage to locally sourced, locally produced as well. So those would be sort of my take into the future. In terms of how we recover from here, I think, as I mentioned to you earlier, a lot depends on the factors that we spoke about, the harvest season, the summer harvest, the monsoon, and all the other reforms that government is going to announce. But we do hope, like everybody hopes, there's going to be a V-shaped recovery from here, and hopefully we'll have a double-digit growth, from 2024 or for the next 10 years.
Abha, if I may just add one small point to what has already been said in terms of the next 10 years. I also think whilst we are seeing consolidation right now, we will see the emergence of a large number of regional and perhaps niche brands that will make our markets, frankly, once again, more interesting and more dynamic.
Yeah, indeed, and it also broadens the market. So looking forward to that. But great to have you both on the show. Thank you so much for taking the time out and helping us understand what happens to FMCG given the changing dynamics that the industry is facing, not just because of the pandemic, now because of this new devil, that's the rise in input cost pressures as well. But good to get in that long-term visibility on the sector.